Hello and welcome to the weekly market view with Bill from markets.com. Nice to see you, Bill. What is going on? Yesterday, 6,400, we were ticking above there, rally looked like it was going, and the space of less than 24 hours, big crash.
Well, I mean, I've been dumbfounded, gobsmacked, whatever you want to say, all day long, because everybody is... Maybe I didn't read the same minutes from the FOMC, but I mean, people talking today, well, could the Fed stop QE immediately, recovery, and this, that, and the other? I don't see any change whatsoever. The Fed fund futures have implied no change in rates until probably late 2015.
Yeah, so nothing really massive has changed. What's triggered this sell-off? Because the PMI numbers from Europe have looked a bit better. We had a wonderful ZEW survey from Germany, and the rally really looked to be continuing higher. Today's snapback, do you think there's more to come?
Well, I think we've talked about this before as we went into last year. I think I'm no different than anybody else. 6,200, 6,300, 6,400. We were all looking at these kind of numbers, but not by the middle of February of this year, maybe second or third quarter. So I think maybe, if nothing else, everybody got together and said, let me get out. And like anywhere else, a couple of sellers here, a couple of sellers there, and all of a sudden it's snowballed. I just think people are using this as a reason to sell, go into cash and say thank you very much. The market's done far better than I expected in the first 3.5 months of this year. But I mean, one of the things that look at, we were talking about this last week, we've got worse than expected GDP numbers, okay? So the euro came under some pressure here. We took out 135, 130, such and such. Then today, of course, the euro at one point was well off over 100, took out that 132.86, which is a critical support level. Now, was that because of Angela Merkel yesterday saying, euro at 130 to 140? Then, as you mentioned, PMIs today, okay, nothing great, okay, one way or the other. And then I think maybe we just saw a lot of people saying, well, let's take some profits.
So you don't think it's down to, I keep on saying that really I think the market at the moment is not pricing in the political risks that are literally days away.
Yes.
Firstly, the sequester is just around the corner, and you've got the Italian elections this weekend.
You see,
do you think they're playing a part?
And I think they should, because remember, over last weekend we had Cyprus. No winner, okay? I'm not downgrading Cyprus, but here was a situation, well, the confusion here. And as you just say, in Italy, I mean, that's what everybody's talking about. 2, 3, 4 different scenarios. I have no idea who they will vote for. The worst case scenario is maybe Berlusconi getting in, hung Parliament, etc. That will be euro negative. Now, if that's already in, buy the rumor, sell the fact, I think, is that the reason why we saw the sell-off in the euro? But again, what the economic data has told me from the Eurozone, and what we found out, and I was quite shocked yesterday with the minutes for the Bank of England. I guess I was like everybody else. I thought it would be the usual suspects, 8 to 1. I thought they were quite dovish. So my feeling is with what we've had, remember just 3 weeks ago, Euro's 137.11, which would imply 18 basis points of tightening in December. Well, that's gone. I think the market now saying, well, maybe we really will get 1, possibly 2 rate cuts by the European Central Bank. Not until after, the March sequester, the budget here. And of course, market now applying a definite minimum 25, probably 50 billion extra quantitative easing after probably April or May of this year.
Yeah. And so as February draws to a close, obviously a slightly shorter month, I suppose what can we really take away from February, because it has been pretty mixed, to say the least.
Yes, it has. I think what we take away is there is the real possibility we will see a continuing move up in the equity markets, okay? Whether it be 64 to 67, whether it's 1,500 in the S&P. I think what we've seen is the markets got ahead of themselves, which they always do, but there is the real potential, and I'm still very positive on the equity markets. I see the central banks, both in the Eurozone and here in the UK, going for, quote, growth rather than inflation, which there is no inflation. And the only reason we're seeing the movement in the bond markets, discounting what may have happened in the gilt market today, because will we or won't we, lose that AAA rating. So, I mean, today it's holler for the dollar, bonds, treasuries, safe haven buying. But I still see, we will see flows back into the equity markets. I think, like anybody else, let's take some real nice profits. And I mean, we're starting to come back. We're starting to come back off the bottom. Last I looked, cable was already up like 40 ticks on the day.
Yeah, so a little bounce perhaps. Well, we'll wait and see. Thanks very much for that, Bill, and good to see you again.
And if I'm not here next week, I've been elected Italian Prime Minister.
Yes, I look forward to it. That's it for this week.